Well, a change of pace for you now. It's time to get you some business news. I'm joined here in the studio by France 24's Catherine Bennett. Hi to you, Catherine.
Hi.
The EU then saying that they're likely to punish Belarus after the country forced down a flight. That was back in May in order to arrest a journalist and activists that they were seeking. EU diplomats saying they have agreed on a deal. What kind of sanctions are they proposing?
Well, we're looking at quite broad economic sanctions at the moment. Now, the EU has previously said that it wants to hit the Lukashenko regime in the wallet and that it wants to impose sanctions that will hurt. So let's have a look at what they've decided. First of all, they've put forward a ban on new loans. Also, EU investors won't be able to trade stocks with Belarus or buy short-term bonds. EU banks can't provide investment services. And on top of that, there will be certain export and import restrictions, including stopping the EU from buying tobacco and oil products from Belarus. Austrian diplomats did try and put up a fight during negotiations. Now, that's because Austria has financial interests in the country. When many EU banks pulled out of Belarus last year, Austrian lenders actually increased their activity there. So they're set to be impacted by these sanctions as well. Now, this isn't a done deal just yet. EU foreign ministers are meeting on Monday, where they're likely to approve visa bans and asset freezes on some 80 Belarusian individuals and companies. And they will, of course, discuss this latest round of restrictions as well at that meeting. Moving now to the UK, where the Food and Drink Federation revealed on Friday that food and drink exports to the EU have almost halved in the first 3 quarters of this year. Trade groups say that it's a sign of things to come, as UK manufacturers adjust to life after Brexit. Maria Sophos reports.
For British producers, it could be an indication of how post-Brexit trade barriers are going to affect their business. Exports of food and drinks were down 47% from 2020 in the first quarter of 2021, a loss of €1.6 billion. Measured over a 2-year period, the decline is even greater, with such exports down 55% in the first 3 months of 2021 compared to the same period in 2019. That's a loss of €2.3 billion.
The loss of £2 billion of exports to the EU is a disaster for our industry, and is a very clear indication of the scale of losses that UK manufacturers face in the longer term due to new trade barriers with the EU.
According to the head of the UK's Food and Drink Exporters Association, the losses are partly due to the EU's stockpiling of UK goods prior to Brexit. Yet he added that the downturn had also occurred as a result of additional bureaucracy, customs delays and the cost of trade with the bloc.
We're continuing to battle against inconsistent interpretations of regulations across the EU and having to weigh up whether the time and cost involved is sustainable.
It's the first time in decades that the UK has exported more goods outside of the EU than into it. Unsurprisingly, though, the decline is also being linked to the effects of the COVID-19 pandemic.
Well, let's head to the markets and see how they're doing at the end of the week. European markets closed lower on Friday, with investors spooked by that export data and the news that retail sales in the UK fell as well. The London FTSE was down just under 2%, the CAC 40 dropped 1.5%, and the DAX shed 1.75%. We're also seeing indices tumble over on Wall Street. The Dow Jones has dropped over 400 points and is on track to post its worst week since January. The S&P 500 fell to 0.9%, and the Nasdaq is also in negative territory, dipping over 0.5%. Now for some of the business headlines from around the world. The Chinese company behind the video app TikTok saw its earnings double in 2020. ByteDance's revenue grew last year to $34.3 billion, while its annual gross profit rose by 93%. TikTok's popularity soared last year during global lockdowns, making the company the world's most valuable startup, according to market analysis firm CB Insights. HSBC has agreed to sell its French retail banking operations to My Money Group, backed by the private equity group Cerberus. The deal will offload 244 bank branches, 4,000 employees and €24 billion in assets. It's part of the bank's overall strategy to wind back unprofitable European operations and instead focus its presence in Asia. Staying in Europe, where Starbucks' EU business paid $3.1 million in tax last year, while paying $183 million in dividends to its US parent company. This despite racking up large losses during lockdown. Tax fairness campaigners say that the company isn't being transparent about how it reports its earnings. And that wraps up the business from me.
All right, Catherine, thank you very much. We're going to take a short break, but up next will be our Euro Cup Daily programme. Looking forward to that.